following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly, or should I say usually bi-weekly source for all things options. My name is Mark Longo from theoptionsinsider.com, as well as the old Options Insider Radio Network. And I joke about the bi-weekly because it's been a while since we've been back on. It's been a week, actually. Of course, quite a few things have happened in the interim and a lot to discuss. We have a lot of grist for the old mill today. But before we do that, allow me to introduce my cohorts here on the old All-Star panel, starting with the man from Maine himself, beaming in all the way from the devastated, storm-ravaged East Coast. Good old Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the show. I'm glad to see that you survived not only an earthquake a few weeks ago, but now Sandy.
Yeah, we actually had our town recorded 70-mile-per-hour winds.
That's hardcore for up in Maine. I was trying to think, and I obviously grew up in New England. The last real hurricane I can remember hitting that area, I mean a real windy storm, powerful hurricane, was Gloria in 85 when I was about 10 years old. And since then, there really hasn't been much. So this is really the first storm in ages. I don't know. Did Gloria even hit Maine back then, Andrew? Or were you living in Maine at the time?
In 1985, I was in California going to college.
What am I saying? 1985, you were like 3 years old, right?
Yeah.
you were pre-womb.
Well, I was in the University of California at Santa Cruz. You could say I was in some sort of womb, but not not the original one.
Wow. I won't even go near that. Let's just move on from Andrew then, shall we, listeners?
What I come into here?
We did survive. We did survive the storm, though. Maine did.
Glad to hear it. I was worried about Maine breaking off there for a minute and going off into the ocean. Glad to see our lobster supply is safe yet again.
No, I was saying the lobsters, they're okay.
All right. Also joining us, listeners, you just heard his booming voice coming in all the way from St. Charles, Illinois. He is the man from the mountains, good old Uncle Mike Tosaw, a man who's prepared for any natural disaster because he's from the mountains. He can just go back home and it's fine.
That's right. What's the big deal?
You know, plumbing, electricity, who needs those things?
That's what I say. I have this solar powered internet that I have going out here. I had to rub two sticks together to get a spark, and then we're off and running. And they're talking about getting running water out here one of these days, but we'll see.
One of these days. So yeah, you look down your nose at all natural disasters, I'm sure, because that's just the way you live.
Well, I mean, to tell you the truth, my wife actually during the tornadoes last year in southern Illinois, she went down there to help. So not able to pull it off for this natural disaster, but maybe the next one she'll get to go.
All right, and also joining us on the old All-Star panel today is Dave Vitamonis from Options Express. Dave, welcome back to the show, sir.
Hello. It's been a while. I'm glad to see everybody's safe.
Everybody's safe, everybody's happy, or maybe not happy, but everyone's safe and healthy at the very least. And as we talked about at the top of the show, there is a lot to talk about since our last show. So I think we'll just dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, where we talk about what's been trading, what's been going on in the old markets, and not a heck of a lot, really, to talk about. So I think we can kind of just end the show right now because not much really has gone on since the last time we joined you, faithful listeners.
Show's over.
Yeah, that's
Show's
it.
over.
Now, let's dial the needle back a little bit to the end of last show, actually. We were talking about Apple. We were pontificating about whether it would open around unched, and that would certainly be an unprecedented event for Apple, at least for the near-term history. Certainly would also, at least many of us thought, annihilate pretty much any long premium holder that was out there and maybe teach them that it's not exactly a sure thing to buy premium in Apple going into earnings every announcement. What we saw was something interesting. The next morning, Apple did open near unched, or was what's approximate for Apple around earnings near unched, about 5 handles away from where it closed. Usually it's moving 25, 30 handles at the very least. And what we saw was a weird scenario where long premium buyers actually did all right. It didn't come in at much. And if a lot of guys I was talking to who were hardcore short Apple vol were very upset that it didn't really come in. So it was this weird scenario we had where you can kind of make out all right if you were long, particularly if you're on the sophisticated end of the spectrum, you're able to scalp some of those after hours swings. Of course, that's
$25 after hours.
That's a very limited spectrum of our audience who have the capital and the wherewithal to be able to do that, which is kind of gets to my point again about maybe some after hours options trading, but we won't get into that right now. But but it's still an interesting beast to watch. I don't know, Andrew, Mike, you guys, and Mike, I know you're out, but were you watching how the options performed on Friday, and were either of you a little bit surprised at exactly what we saw unfolding out there?
Yeah, it was interesting. I was kind of curious with Andrew. What did you end up doing with that straddle? I'm guessing you got out of it at some point during the day.
Well, just trading the straddle, but yep, basically, yeah.
Okay, because
yeah, I even sent Mark an email on the after hour. I said, I hope you're not long this. I hope you're just joking about buying this weekly straddle, because what it looked like going into the Friday morning open is that this was going to be an apocalyptic event for premium holders here at Apple, and maybe analogous even to the Netflix apocalypse for premium writers on the downside. There, this premium is going to come in hard and fast, and it never really did. Which is, and I think that just goes to show the nature of Apple. It is really its own beast. And of course, I was talking to some guys on the flip side who were hardcore short Apple Premium, left it on over the weekend thinking they can get out of it this week. It naturally would come off. And of course, we had a hurricane roll on through, so that seemed like that was probably the worst trade ever too. So that, I think this past weekend and the events of Sandy and everything else really helped to underscore what we've talked about a lot on this show and scratched our heads about a lot on this show is, there's always that mad race to dump premium going into the weekends. I certainly understand it. As a former market maker, I used to partake in that myself. You didn't want to carry any extra theta over the weekends. But there is so much literal weekend risk floating around right now, as we just saw this past weekend. These crazy events can come out of nowhere to really derail everything. So it pays every now and then to have a little bit in your back pocket for a rainy day. We used to call them bullets when I was on the floor. Usually they were downside puts, but they can come in any form of protection or any form of long units you can put on there depending on what you're trading. But, all these people out there who are just constantly doing nothing but selling downside, selling at the money, selling. It does pay on rainy days like this that it actually can work out. And you got fortunate this time. It looked like we were going to open yesterday just completely apocalypse, everything selling off many, many handles, many percent. We actually didn't happen. We actually opened up a little bit down, but nowhere, I think, what anyone expected, and then rallied back and then closed a little bit off on the tops there. So you got very fortunate that you didn't exactly, if you were a premium seller, you didn't have the wool pulled out or the rug pulled out from under you, and today you're doing actually all right. We're up about 1% today in most of the major indices, 1.5% in the NASDAQ, and that trade worked out for you, but it could have so easily gone the other way. That this is just another reminder to all of our listeners who race to do nothing but sell vol going into the weekends. Maybe once in a while you want to consider the macro environment before you do that. And perhaps, certainly that hurricane was no surprise. People saw it coming for a week. If you were blowing off vol going into that weekend and getting short aggressively, you were putting yourself in a very potentially dangerous situation. So, Uncle Mike, Andrew, Dave, what did you guys think about how we opened yesterday? Did that surprise you, and how we did from a vol perspective? Were you guys as surprised as I was?
I wasn't surprised necessarily at the open, just because I was watching the futures over the course of the couple days, and I was surprised. I guess my surprise came on Monday. I figured the futures would be getting clobbered at some point, and during the after hours, looking at the mini over those 2 days. But so Wednesday morning, not surprised, but Monday night or throughout the day, Monday, once I was looking at the after hours futures, that's when my big surprise came.
Andrew, I'm guessing you were happy to be a degenerate premium buyer over the course of the last couple of days. Not today, perhaps, but at least when everything was unfolding, you're like, I got some juice in my back pocket. I'm a happy guy right now.
You know what? I didn't actually have that much, to be honest, over this.
You shame yourself, sir.
And I thought the ramp up in volatility was not on Friday. I think after Apple, I expected it to come in some more. So when I expect it to come in and it doesn't happen, I wait. So, and then, certainly didn't buy anything yesterday when the vol was ramping up again, because I thought it was totally ridiculous. And then today, lots of stuff came in. So, just mostly sticking to kind of funky little back spreads in the VIX and things like that. So that's actually where I was buying the juice. I just couldn't believe we were going to hold up there at around, 18 plus or whatever the VIX closed last night. I mean, we got ridiculously backward for no real particular reason, I think. So.
And Dave, what's been unfolding over on the OX desk the past couple of days?
Well, I mean, the futures, of course, were still open. They did look ugly Sunday night, that's for sure. A lot of nervousness, but I think it was a good thing that the market was closed for that day or two, and the futures really bounced back hard. And by that time, come Wednesday morning, everything was business as usual. So it could have been ugly Monday, because it was certainly getting pummeled Sunday night, but then they rallied back and everything stabilized. So all is well in OX land.
Yeah, and certainly there were a lot of earnings that helped to, were kind of overshadowed by the recent events as well, including Uncle Mike's favorite new name and favorite new holding. Of course, Ford reported, I believe it was, wait a minute, didn't they have earnings yesterday, or was it, what day was
Tuesday,
it?
Actually, yeah, Tuesday. So yeah. I was listening to it on the radio and didn't know what to do.
Yeah, exactly. It's one of those things. And that gets to another point, perhaps. I've been over here. There's a big show in Chicago this week, a big industry show called the Futures Industry Association Expo. For those of you who don't know, it's an enormous industry show. People fly in from all over the world, or at least they usually do when there's not a hurricane on the East Coast. But, people fly in from Latin America, Europe, everywhere you can think of, Asia, to come to this event and talk about futures and options. And it's just been a nonstop discussion about the closures of these exchanges. We've been doing a lot of our radio shows on the show as well. Unfortunately, not as many as we planned, because so many of our guests from back east simply couldn't make it out here. But, the recurring theme, and I'd be curious to hear what you guys have to say about this, is just really pointing a lot of damning fingers back at NYSE and saying, there's just really decade plus after 9/11, everyone's been doing disaster preparedness called BCP, business continuity plans, for well over a decade, planning for localized events like 9/11 again, which this kind of planning doesn't help you for, but also more globally diverse things like pandemics. I remember just a year or two ago when all the bird flu was the rage, every exchange was going through pandemic planning and how to handle that. Certainly you'd think if you're planning to be able to withstand a pandemic, you could stay open during a hurricane. Yet there were so many different disparate issues pointing and pulling, and you hear the tinfoil hat guys coming out on these things now saying, the floor guys didn't want the visual of the market running even for a few hours without them, so NYSE pulled the trigger. The firms didn't want to get run over on their positions because they couldn't maybe be fully staffed coming into Manhattan, so they didn't want to open because they didn't want their positions to be essentially run over or manhandled, and they couldn't handle them. So a lot of people were pulling, even though a decade plus of planning just for an event like this, they still just opted to close the market for 2 days. And I think it's a really disappointing decision personally. I'm not sure what you guys think. And also just everyone's talking for months now about how the loss of confidence from the retail investor, all these scandals, all these awful things that have really helped to diminish the confidence of that retail customer. Here we had an event that was a perfect opportunity to help turn that around a little bit and say, hey, look, the markets have planned. We had plans in place. We had continuity in place. We can open, we can weather the storm literally, and we can still provide you with access to, let's say, your Apple. There's no reason NASDAQ couldn't open. That's absurd. But NASDAQ didn't open. And so it's just ridiculous. I'm curious, Dave, I know you guys were around in the office. Did you get a lot of angry calls coming in over Monday and Tuesday saying, why aren't we open and what's going on?
Oh, no, not at all. Everybody was pretty much in lockstep. Now, most people know what's going on. And hey, let's face it, it's still you still need humans to run things. It's not all computers. So I don't know if the liquidity would have been so great. And as we saw in the futures on Sunday night and Monday, I think it was a 150-point move on the Dow futures in a matter of 2 hours. So I don't know if that kind of liquidity is going to be in the market. Maybe it wasn't such a good thing, at least for Monday to open.
I don't know, maybe. There's arguments. Yeah, obviously it may not be the ideal liquidity scenario. But, is at that point, is some liquidity not better than none? I would think so. And also, people can't get to Manhattan. That's not exactly an unforeseeable scenario, that people have been planning for the past decade. I think a lot of people, in a lot of their plans, whether it's a 9/11 or whether it's a storm, you're not going to be able to get to your office to trade. So you should have, over the past decade, planned for this. And you should have, we were joking about it this week, but it's true, your bunker in Omaha. You should be set up and ready to go out there so you can provide some liquidity, provide access to these things. And a lot of these third-party firms who were complaining we can't get to our desks, so we're going to get run over, that's their fault. They really should have been planning over this past decade. Guess what? You can't get into Manhattan if there's a massive storm. Plan around that. If there's a pandemic, you're not getting to work. If there's another terrorist attack in Manhattan, you're not getting to work. So how do you function? This is really, I think, just a very, very bad scenario for all involved, not least of which the retail, who had no access to anything for the past couple of days, except for some, futures and other things that were floating around out there. So, Dave, I'm sure you probably got it from both barrels, I would think, from your clients.
Well, along those lines, you bring up a good. I'm sorry. You do bring up a very good point. But that's why we do advocate people having some sort of futures exposure. And things can happen in the middle of the night also. So if you do have a futures account, sure, it's not a true hedge, but at least you have some sort of way out. Also, another thing that I recommend to traders all the time is have a backup brokerage account, because you don't know when perhaps a particular firm can go down. And if you have everything in one place, well, guess what? You're stuck. And it happens to every firm.
I like that, Dave. How egalitarian of you recommending your clients have additional brokerage accounts out there just for backup.
Yeah, they have one at OX and the other one at Schwab.
Just looking out for the client as usual.
See, that I like that. That's a good point. That's something I think a lot of other firms would be hesitant to bring up on their own show. Open up a brokerage account at another firm, but it's good advice. It may not have helped you Monday or Tuesday, but in some scenarios where there is some sort of outage, we've certainly seen some of your competitors, I won't say who, have severe outages over the past couple of years where you simply could not access your account. So if you keep a little bit aside for a rainy day in the rainy day account somewhere else, you can at least do something with that. It wouldn't be ideal, obviously, but you can maybe at least get some liquidity somewhere else. Put on a hedge, do whatever you need to do. Uncle Mike, what were you watching? What were you doing over these past couple of days aside from sitting in your office twiddling your thumbs and watching the futures?
Last couple of days, just reviewing old positions, nothing too unique. Not necessarily over the last couple of days, but today, just noticed Chesapeake Energy just came out with earnings. We have holdings in that. We're in the long the stock, short the November 22 covered call, and looks like they did pop, but now they're back to up like about 14 cents. But that's what we're watching. Was watching Ford, trying to figure out when Ford was going to come on again. They had a pretty good earnings report too earlier this week. So watching a lot of things, but not doing too much, I guess.
Are you back in any short puts in Ford, or you don't have any underlying with covered calls? I forgot what you had on out there in Ford. I think you had some covered calls on, correct?
Long the underlying, short the 11 covered calls, so probably do a roll of some sort on the covered calls in the next day or so.
You're out, baby. You're out. Out of Ford as well.
If someone wants to call me out on the Januaries, be my guest.
All right. Anything else catching your eye here, Andrew? And of course, you haven't even talked about today's markets. Of course, vol coming off aggressively. The markets, like I said, up about 1%, and not exactly a surprise. Vol coming in hard. It's kind of been pent up for the past few days. Uncle Mike was joking. He got a couple of free days of theta due to Sandy, so we should guess all tip our hat to her, say thank you for the free days. But but yeah, anything else going on with your mentees today, Andrew? Any interesting developments over there in option pit land?
It's kind of what we've a lot of stocks are starting to trade. Again, IV 30 lows, the 1 year lows, 2 year lows. Gold hit a new low today. I think it's a contract low for implied volatility. GVX is like 12 and change. Just like these metals aren't ever going to move again. Now I don't know if this is a prescription or a result of maybe like people aren't worried about Europe anymore or what, but I mean that's just dirt cheap volatility for gold. So we got that piece, and the second piece is kind of looking at time spreads. Volatilities. It's a cheap way to buy calls, buying out of the money time spreads. Volatility is just so low right now. So we're looking at several names, kind of here, there, and everywhere.
Speaking of time spreads, I was at some panels this morning at the conference, and I won't say who. He's a representative of a competitor, but we all know him here on the panel. But someone raised the point at one of the exchange leaders panels to the moderator that, hey, we're talking about education and options. Everyone talks about the entry points and maybe the exit points, but no one helps them along the way with the adjustments, and that's so critical in the options world, something we've talked about on this show many times. Adjustments are really where the rubber meets the road. And this moderator's response, which I thought was an interesting take, which I kind of disagree with, but I also agree with some elements of it, is that that's irrelevant from his point of view, because he was thinking that, you can make up for that with increased trade frequency, diminished. So his point of view is the risk management should come on the order entry side of the trade, and that you adjust it through contract size, and then you just put it on and let it run. Apparently that was his viewpoint, and then you move on to another trade. I'm guessing in his worldview he's thinking a lot of small repetitive trades, not necessarily too complex, because that kind of strategy really limits a complex trade, because that complex trades need management. So I thought it was an interesting response to that, and perhaps that could serve as some sort of entry point to that for some very basic retail customers. I'm not sure if I would tell someone who's doing aggressively doing time spreads, or really anything that has any sort of long premium component. You don't have to manage that, because that's really what you have to do. But as a point of view I never had really heard before, and I thought I would float it out there to you guys to let you pontificate on it a bit.
So what do? You buy something and then you keep buying more of it if it's not going.
I don't know about that. I think his point was you put it on and then that's it. You move on to the next trade, and it wins or loses, and you do risk management and adjustment at the order entry phase by contract size, apparently. So if you minimize the amount you're doing, so you don't do your whole portfolio in it, and then you're on to the next trade and you keep doing your frequency of trades, and eventually your probability will go up. And I don't agree with that.
As long as you have some edge per trade, that's.
Yeah, there's obviously an assumption of edge, of course, inherent there. I know my knee-jerk reaction to that is that that's ridiculous. But then on the flip side, there is a barrier to a lot of these very basic retail people coming in and understanding these concepts, like management of these trades. So maybe you can argue they shouldn't be doing them, A. But B, if you get them into a little more frequently, maybe a little less complex style of trading to begin with, and you increase their frequency to and make sure their trade size is manageable, there might be something to that, actually, for some of the basic guys as a point of entree to getting to the more complex trades when they need to manage them more aggressively.
It's funny you should mention that, because I do have a thought on that, and I do have two real life examples on that from a client of mine a couple years ago, actually. But I'm going to save it for the strategy block.
You're learning, sir. With that tease, I think we'll close out the trading block for today and dive into a real quick odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, where we break down something interesting and or unusual options activity that's lighting up the old tape today. And as I mentioned earlier, I've been running around all day at another one of these conferences and events. I'm always pulled away from my trading screens these days, so I can't be up to the minute sometimes on these things. But what do I do in a scenario like that when I want to catch up on the day's most interesting, unusual activity? Why, of course, I surf on over to theoptionsinsider.com and I pull it up myself. And you too can do and follow along with me and play the home game if you like, right here on the Options Insider. And I'm going to pick off one off the top that I think is really interesting. Of course, it'll interest Andrew because he loves playing in this space. And this is the gaming side with Take-Two Interactive, ticker symbol TTWO. They closed today at $11.21, pretty much unched on the day. And they usually do about 3,000, maybe 4,000 contracts a day. They did nearly 16,000 today. The bulk of that, nearly 15,000 contracts, came up in one massive straddle trade. Someone came out and blasted the DS11 straddle almost 7,500 times. So almost 15,000 contracts in total, hitting the bid, or actually about a nickel or a dime above the bid, for $1.60. Now, this is an $11.21 stock. This is about a month and a half or so straddle we're looking at here. And this is a stock that's post-earnings. They already had their earnings they announced a couple of days ago on the 31st, actually, on Halloween. So this is a post-earnings straddle that's trading for a month and a half for $1.60. And this is just a very interesting trade for a lot of reasons. That is a ridiculous amount of premium for that sort of straddle. Obviously, there's been some rumors going around about Take-Two. This guy obviously taking on some takeover risk here in this trade, which is probably why he's not blasting it out naked. He's probably doing it against some underlying in his position. Either way, that's even more interesting. I think that's a great trade if you're an underlying holder in here right now. Take advantage of this premium. Take that $1.60 off the table for a month and a half. People have been floating these rumors about Take-Two forever. I mean, if it's going to happen in the next month and a half, I don't know. But even if it does, I can't imagine the premium will be that much higher than what you're getting for blasting out this straddle. And if, of course, we dip to the south, then, of course, he's picking up some more of this trade. But I think this is a really, really interesting trade. Andrew, I know you're floating around this space a lot. You looked at Take-Two in the past. What do you think of this guy blasting out this straddle?
No, this is a good one. This is a good sale. I'm almost positive. Because like I said before, this is a name I traded a long time ago as a market maker, and there was a big, ginormous premium seller in there from time to time. So this would be right up their alley, whacking that straddle out. And look, and that's $1.60 straddle. That gives you $3.20. Ultimately for that, you get a lot of room. Get a lot of room for this thing. So up or down. So I'd say, go sell it. Go sell it against your stock and be happy.
Obviously, this guy has crushed the vol a bit with his trade, but it's still fairly substantial. You can look. I'm looking at this straddle right now. It's like $1.50 coming out bid. So there still is some juice in them thar hills. Usually, you see a big trade like this, and it just crushes everything. Especially with a guy like this, people, if they know is a premium seller, they're going to fade him to high heaven. There's enough takeover juice out there to keep this afoot. Of course,
soaked it up.
Of course, we also saw something like this. Maybe the flip side of this is the fact that they digested this trade so easily. It kind of makes me reminiscent of MMI before Google bought them out, where we saw some weird activity out there in the call wing and in the volatility being resilient in spite of the fact of what was going on in that name, and it really should have been coming off, and it did. Maybe that leads us to suspect that the deal is indeed imminent, as they like to say on good old CNBC. But that, to me, interesting trade. If you're trading in the gaming sector, just looking for a good perhaps premium sale, this is not a bad trade. Month and a half. Maybe if you're worried about the takeover, you put on some underlying to go with it. We don't talk that much about on this show about straddles versus underlying. That's a great trade, I think, for a lot of retail. We always talk covered call. We always talk short put to get into stock. But stock and a name that you're relatively enamored with, blasting out, I hate that term, blasting out, selling straddles to as a way to increase the income stream from that. Of course, there's the downside component that you would pick up more underlying if it does go against you.
You are short two puts.
Exactly. So you need to consider that. But I think for the more sophisticated user out there who has a name like this where the downside is relatively manageable for the most part, that's an interesting trade, I think. And I know I talked to the OIC guys, and they do all these studies about collars and things, and they tried floating that notion of that study out to some of the retail and some of the pension funds. Hey, straddles versus underlying, and it just blew people's minds. The pension fund guys were like, "Whoa, two puts! What is this?" The retail guys couldn't handle it. Way too terrifying. So they backed off that and went right back to the covered call because people can digest that. But Interesting strategy, interesting trade here. I wanted to highlight this one because it also, as you're right,
it's an all-income strategy, basically.
Yeah, all-income strategy, and it is still bid. Read into that tea leaves what you will. Maybe the thing's going to happen, maybe it's not. Even if it does happen, though, Andrew, what are the odds you're getting a substantially higher premium than what that straddle is going for right now? You know, you going to get $3 or $4 on an $11 stock? Probably not.
Yeah, not much.
Yeah, I mean, so you're already kind of getting that, most of that built in, and you're getting that for a month and a half. If it happens in January, you can do it all over again. So just an interesting trade for a lot of reasons, and one I wanted to highlight here. Again, you can play the home game. Surf on over to theoptionsinsider.com to find a lot more about this trade, as well as many other unusual activity that's going on and lighting up the old tape today. So even when I'm out of the office doing all this glad handing, the site is still up and running and giving you all that sort of information that you crave. And with that, we're going to close out the old odd block for today and dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that music means it's time for the old odd block. This is where Dave takes the reins of the show, and I get to sip my beverage and relax my tired vocal cords. So, Dave, take it away, sir.
Well, good day, everybody. Regarding an email we received last week about the Extend program and about the Iron Butterfly, I just wanted to follow up. Looked into that, and the best way to actually place that trade is just doing a condor. So you could do it for his butterfly and add a leg, but the best way to do that is just doing a regular iron condor.
So you
with
put
that butterfly trade.
So you select Iron Condor from the drop-down menu, then you kind of just do a little bit of manual adjustment.
You could do it. You wouldn't need to do a manual adjustment if you did the Iron Condor. We could do 1, 1, 1, and 1. If you did the butterfly, you would need to add a leg. So that's actually the easiest way, is just to do the Condor on the Iron Butterfly.
Okay, that's good to know for our listeners, because you're right. If you do the butterfly, you have to adjust it a bit. The Ironfly, typically 3 legs instead of 4, so you might have to just knock one off there. But yeah, that's the easiest way to put it up and extend. That could save our listeners some time. Oh,
yeah,
and by the way, I
confirmed.
I don't mean to cut you off. I confirm what you were talking about, where after you said you could do the ratio put spreads and extend no problem, I went back in last week and tried some and worked some ratio spreads. Put spreads, and you're right. For whatever reason, this time I was able to do it, and I hadn't updated my extend. I think I had the most recent version, the same one I had before. And typically in the past, it seemed like sometimes it's up in the air whether it moves the legs 1-to-1. But this time I was able to adjust one leg on a 2-by-1 ratio, and it took it no problem. So I don't know. I can commensurate with the listener who has had that problem. I know I've encountered it too, but recently I've been able to do ratios no problem on extend. So maybe they've smoothed it out on the back end there to make it a little more intuitive to let the software know what you're up to.
Yeah, let's hope so. I've never placed myself for my personal account. I've never placed it, so I never encountered that issue. However, when I did replicate it, it was fine. But Iron Butterfly, just use the Condor. What else is going on? Tomorrow should be interesting. I think, what do we have? The today consumer confidence number, I think the highest in 4 years. So we're kind of looking at the bond market now. Overall trading, I mean, it's been very, very light volume. Nothing, no big trades, no big recommendations from any groups. So we're just kind of looking forward to seeing what the unemployment number is. Probably a little lighter probably a little bit better. That's what I'm anticipating. And guessing the bond market's doing the same because it sold off today on the consumer confidence number and didn't really rally back. Looks like earnings are coming in good today, by the way, after hours. What do we have? Priceline,
Chesapeake,
LinkedIn,
who else?
Starbucks. They're all doing quite well. So we'll see what happens tomorrow. Like I said, again with the unemployment number. Me personally expecting a little bit better than expected. So may get a rally on that and possibly a bond sell-off. Who knows? Other interesting tidbits. Facebook, of course, rallied back last week on earnings report from 18 to 25. And as now we know, they freed up 250 million shares that were locked up, and the stock has pulled back to $21. Now, it came from about 18, 19 on that earnings report, shot up to 25 pre-market. So that's something to keep an eye on. However, we do have to remember that there are another 800 million shares still waiting, and those are going to be released on November 14th, by the way. Other than that, nothing too much. I think we've lost a lot of traders because of this storm, believe it or not.
They've been washed out to sea by Sandy?
I hope not that bad, but I'm hoping they'll be back with us next week.
The good point about LinkedIn, they're, of course, rallying hard. That's a former favorite of good old FHM, Uncle Mike's counterpart here on the show. He used to love his LinkedIn. I'm not sure if he's still a fan. Up about 6 handles in the after hours now to 113. Forgot to mention earlier on the earnings front, SIBO announced this morning before they open. They're not one of these after hours ones. They like to do it early. And they actually, it looks like the market giving them some love, up about 4% on the day today, up to about $30.66. I believe that's a high for them. I think their previous high was around 20. Actually, it might have been 34. Let me pull up the chart and see. I think after post-IPO, they might have gotten up to around 34. No, I think we're back at highs. So yeah, SIBO, even though options volume continuing to struggle and to spiral, their proprietary products, particularly VIX, continuing to be the lone bright spot in the options market as a whole. So the market rewarding them, giving that stock a nice rally, up about 10 handles or so over the past 6 months. So SIBO getting a little bit of love here in the market today. So thank you for that, Dave. Some stuff to watch, and with that, we're going to close out the old Xpress block and dive right into the man from the mountains block, aka the strategy block.
The strategy block.
All right, and that fancy music can only mean one thing. It is time, indeed, for good old Uncle Mike Tosaw to join us from his mountain on high. Uncle Mike, welcome to the program, sir.
Well, I've been on the program the whole show. It took you 40 minutes to welcome me.
I totally forgot. Nothing like that fancy music to welcome in a man with a bearskin coat and a campfire. But yes, it's perfect. No irony there at all.
Gotta love it. Gotta love it. Well, I want to talk today about when you should just do a point A to point B type of risk management. And I'm not for it all the time, and very seldom, quite frankly, do I do a trade like that, just because there's so many variables in the marketplace. But I do believe it does have its time and its place. I want to bring up a story, and I've even shared this on the show before, but I want to kind of expand on this a little bit to show you the power of options and how they work. Now, this was a trade that was this trade wasn't mine. This was a trade from one of my clients. This is a couple of years back. And he actually, at the time, he traded his own money quite frequently, and he did very well for himself, actually. And with this, though, I want to bring up one of his losers. There was a company called BP, British Petroleum, and they had something happen a couple years back in the Gulf of Mexico. I think maybe they went to the bathroom in the Gulf of Mexico. One of their guys did, and they got in trouble for it. They spilled something in there.
Something like that.
Yeah. So basically, they were not a very popular company amongst Americans back when this happened about 2 or 3 years ago. And so I had a client, he was convinced that BP was going to go belly up, and he wanted to short BP, short the stock, just with everything that he had. I mean, he was just gung-ho, wanted to short it. I mean, with his whole trading account, not with his whole net worth by any means, but with his whole trading account, he wanted to short as many shares of it as he could. So I looked at him thinking, well, I'm not sure it's going to go belly up, but let's say that you're right. And I forget what the exact numbers were, and these may or may not be true. It was a couple years ago, so forgive me if my numbers are not exact. It was trading around like $26, $27 a share, I think. And he was just convinced this thing's going to go under. It'll go under within 3 months. Like, okay, well, if that's the case then. If you short everything and you're wrong, I'm not going to be wrong. But I know where you're going with this, Mike. That was kind of the conversation. I said, if you short all of the stock and you're wrong, you know the consequence of that. So what I suggested was, let's just buy a whole slew of some 3-month out 20 puts on it. They were dirt cheap. I remember they were just a few pennies. And I said to him, so you're convinced they're going to be bankrupt and they'll be below $20 for sure in a couple months. No question about it. So that's what we did. I think instead of shorting a few thousand shares, we just bought 20 or 30 puts on. I forget what the exact amount was, but nonetheless, that's what we ended up doing with it. And so, as most of us know, BP didn't go belly up. It actually went up during that time frame. And so with all that, the moral to the story, that was one where instead of losing the money he would have lost shorting the stock, I think he only lost like $1,000 or $2,000 on the trade altogether. Not that that's good by any means, but that was one where his sentiment was that it was going to go bankrupt. And we played that sentiment because if it would have gone bankrupt, we'd have been short from 20 all the way down, or 1980 or something like that, all the way to zero based on the short puts. But he was obviously way wrong on it, and he saved a lot of money because of it. So I think that's an example of where you can use a trade like that with options to just use that as a way with which you're not doing any management. I mean, what the heck are we going to manage? It's an out-of-the-money lottery ticket, so to speak. And we just basically waited. We let it expire worthless and moved on with life. And he's been a very successful trader. That was one of his few losers that he's had, actually. And I think that's an example of how you can use options and the power of options to not only use your sentiment, but also limit risk and sleep at night. Worst case scenario, he's out $2,000 if he's wrong, which he was. And this is a case where it was one of the best trades that he ever made because of their best decisions that he ever made because of the fact that he used options. And that is an example of how you can use a small amount of capital for risk management in the option world.
I like it, Uncle Mike. So just to reiterate, Uncle Mike is saying everyone should go out there and allocate a substantial amount of their portfolio to useless out-of-the-money lottery tickets. That is what your counselor and our listeners to do.
So long as it's their money, what the heck?
If it's more than 20 delta, you're wasting your money.
That's right.
That's
right.
Your motto for trading, right?
I think you use that. You generally use that for the biotechs also, where the the stock is trading at $10. Yeah, sure, you're paying $3 premium or something like that, but the chances are is the stock's going to be at 30 or it's going to be at $1. So why bother buying the stock, right? Phase 3 trials come out, always buy the options.
I got a client one time because he sold the options on a biotech stock and was on the wrong side of it, and then decided that he needed help after that trade.
What do you mean?
You don't want to be selling.
How can these Ford $3 calls ever be worth $20? Well, they can.
I'm happy that guy had some money left to give you a phone call with, Uncle Mike there. That's funny.
Yeah.
Sometimes it takes a little pain to get them in the door, but at the end of the day, they're there.
One of an option pit specialty is buying like SPX insurance puts right now, like the 1250s or something like that in December. And actually, when we had this little kick in volatility from 13.5 to like 18 last week, we had clients selling them out. It was a very, the rest of the market wasn't doing much, but their insurance acted like insurance, and really there's a lot of acceleration and all that junk in the indexes. So when the vol kicks up, they were like, okay, well, I'll sell a few of these. So it's a rare thing where you have everything else doesn't really move much, but the insurance factor kind of, ratchets up a little bit. So you don't get that all the time, obviously, but that's a rare kind of double win when you win on the insurance and you win on the kind of the short juice you're holding as well, because the market gamma-wise didn't really move very much.
That's when the gods have smiled upon you and you take your money and you say, thank you, sir. And
You
move on
do.
to
Thank
the
you
next
very
one.
much. Some clients ask me, "It's okay to take this?" I go, "Yes." Anytime you open a trade and you can close it when
It's
you're up
okay
money,
to take this.
you're jazzed. Go.
Exactly.
Made money everywhere. You close them all and you're done. You just walk out.
All right.
I had
Thank
a
you.
great-
Oh,
Then
good.
move to Maine.
Yes.
And-
Then move to Maine and live in the glorious empire of lobster that is Maine.
Pine tree.
All right. Thank you for that, Uncle Mike. A scintillating story for all of our listeners out there.
Great story. Great
And with
story.
that, we're going to close out the strategy block for this week and dive right into Around the Block.
Around the block.
All right, and welcome to Around the Block. This is where we talk about what's on our radar for the rest of the week going into the weekend. Let's start with the big development of the day, of course, which is just the vol crush that has consumed much of the market, especially towards the end of the day. We closed, like I said, up substantially across the board. Looks like we have some good earnings coming out after the bell now, so it looks like we'll probably be up again tomorrow. And, Andrew, we're usually talking about this on Fridays, about the race to sell premium going into the weekend. We talked about how that maybe wasn't the best idea last weekend, even though it kind of worked out if you stuck to your guns. But still, looks like they're taking the weekend out already. They took out Sandy, and now they're rolling into the weekend. And,
I think they took some out today.
Yeah, I mean, the VIX, we down about over 10% today. I always hate talking about a percent, but say la vie. The VIX trading about 1670 today, and looks like if everything else holds steady, it's going to be even south of that tomorrow.
It could be trading 15 VIX tomorrow. 15 and a half without any real trouble.
Yeah.
If everybody do we have non-farm payrolls tomorrow, right?
Yes, that's what Dave was just talking about earlier in the Xpress Block.
So
Yes, we do.
And the ADP report was surprisingly good. So all that has to just do is be not awful, and everybody's going to be looking around saying, because if you guys go, but look at the last chart of volatility when it took the last big spike up, and it was when Google missed, right? And everybody started freaking out about earnings. Now the earnings were awful.
Yeah, that was our first real substantial down day since June, I believe.
It was, and that started our 2-day pitch. And everybody all went up. They're like, okay, we're getting hunkered down again for the big smackdown, and hasn't really happened. So every time you get just slightly better news, Greek's going to have some funky election next week about who knows what they vote on a lot of stuff. I don't know what they vote on.
They vote on gyro sauce, all kinds of good stuff. The temperature of Saganaki.
So much. But yeah, so you could see a little bit of a if they continue to write it down tomorrow, it's certainly possible. So
yeah, if non-farms come in, even in line, this VIX is off to the races to the downside again. I think 15.5 is easily doable, if not south of that. Another weekend where they crush all the balls.
I'll probably close anything I have tomorrow. It's going to have like a little saying, if I don't close my short vol on Friday, I'm always bitter, because it almost inevitably trades higher the next week.
Of course, speaking of next week, it's too bad, and I think I know why he's not on the show. Too bad we don't have Grigas on today, because we can give him a hard time about Groupon. Of course, they have earnings next week, but Groupon trading around the 4 handle today. Just not a lot of love here for the good old Groupon. Just beating the heck out of this name. So I'll have to talk to him and see next week, and maybe if he's out of that, or if he's doubled down. If he liked it at 5, he loved it at 4. Loves it at 4, right? So interesting. We can give him a hard time about that one. Of course, your beloved there, Andrew Zynga, having a lot of heart. Actually did something very clever this week, I thought. They've gotten some flack for it since then, but they had a massive round of layoffs. So they said, this was actually last week. So they said, well, when could we announce them? Well, no one will give a crap. And they announced it during the Apple iPad mini announcement, which I thought was, from a PR standpoint, genius, because no one cared. No one anywhere in technology was paying attention to them whatsoever, so they kind of slipped that through the cracks. Hey, we're laying off whatever it was, a third of our team. But just fantastic from a timing perspective. So
they're just going to get into internet gambling. They're going to like, screw it, we're just going to get into internet gambling and try to make some money.
I may not be a big fan of the stock, but I take my hat off to that strategy. I have to recognize.
Maybe they're getting smarter.
Yeah, there we go. So at least the PR side is good. I don't know the rest of the biz dev or the making of the games actually not that great, but everything else pretty interesting. So Andrew, you're watching the Vol Crush. Dave, sounds like you're watching the non-farms tomorrow. That's your big thing.
Oh, yeah. We're hoping to get some movement. I don't know. I think the interest, like I said, the bonds might get some action from that, too. So,
hey, Dave,
yeah, those are about the only two things on the docket.
Let me ask you this, Dave. We were doing some of our radio shows this week, and someone brought up an interesting comment from another brokerage firm talking about the hassles and the intricacies of having every week be expiration week because of the weeklies. And all, of course, the Friday mad dash that people getting margin calls and having to get money into their accounts. And they floated the idea of maybe flipping the weeklies to cash settled. And I thought that was an interesting idea. Obviously, there could be some gaming around the expiration. Right around that time, you could maybe put some big prints in and try to game the expiration, kind of like what we see on the VIX expiration, just writ larger, perhaps. But maybe if they can find some way to work that out, that might be actually a much better development for you guys. Then you're not every Friday night. You're not on the phone saying, "Hey, you need X amount in your account for this stock on Monday morning." What do you think about that?
I think it would be fantastic. I think our risk department, margin department would probably party for the next week if that were the case.
Except
it's pretty much every Friday now is people calling up. Can I hold my position? I'm short this. You know that you can't take the assignment here. Yes, but I'm watching it. Now, you can imagine how many thousands of people are in these things, and we cannot monitor all of that, of course. So, yeah, it's a juggling act as far as that goes. Used to be once a month. Now it's every Friday.
Seems like everyone's trying to find a ways. Everyone loves the fact that the weekly is such a hit, but they're trying to find some ways to make them more manageable for the brokerage side, for the customer, also maybe to get people away from this mad dash of blasting out premium as soon as they're listed, and trying to find some ways to actually use them to hedge some things, kind of like the way they were intended. So it's interesting, but we'll see how that unfolds. But I thought that was one of the more interesting ideas I heard this week. Some problems still, I think, lurking in the details there, but an interesting idea nonetheless. Last but not least on the old Around the Block, Uncle Mike, what is catching your attention these days, aside from your very, very high BBI, because you got nothing else to do over there these days now that you're out of Apple?
Yeah, no kidding. You just did old habits die hard. I still watch Apple though, but I'd like to get back in it by selling some puts at the 500 level if it does come back down, but who knows what's going to happen there. Some other things that I'm watching, definitely non-farm tomorrow for sure. Still watching gold and silver just sitting there lulling me to sleep, and it's the market in general. A lot of our short puts we're real excited about just because the market's going up. We have to decide whether we're going to roll up or not, or just kind of let them ride, see what's going on there. On our QQQ collar position, we're actually open to the upside right now. We don't have a covered call on at this stage, but we'll see what non-farm does tomorrow. And if we get a little bit of a pop, we might be selling some premium going into the weekend, because after all, everybody knows that the weekend does take away 2 free days of theta. Just kidding. But no, we will be looking at that if we get a little bit more of a rally in the Qs, not because it's Friday, but just because of we'll see what happens with the non-farm. And we'll continue to keep on going.
Yes, and the final update here, LinkedIn still getting some love, up about nearly 7.5, almost 8 handles in the after hours, trading north of 114 now. So I guess there still is some love in the Web 2.0 sector.
Does that company make money, LinkedIn?
They make some. I mean, they're no
That's
Zynga.
another one where they make 20 cents a share.
Yeah, one of those. I'll pull it up right now. I know you're a diehard fundamentalist, sir. So let's see what the PE is.
I know. I just couldn't.
Wow, you're not gonna like this, Andrew. Their PE is 914.
Yeah.
Is that it?
It's like Amazon. I just don't understand why some stocks tread or defy gravity. It's like I realize Amazon has this giant franchise and all this other stuff, but I think Facebook already makes more money per share than Amazon does. And I'm not like trying to be an overly big Facebook fan.
I will say this, yeah. I'm looking at these numbers again while we're talking. When you see Amazon 3,000 and Apple 13, certainly does seem much more reasonable on that front.
I've never figured. I could never trade Amazon as a stock.
Yeah, I've been there as well.
I have one client that the smartest thing I ever saw. I think he sold at 170, 270 Strangle. I think yesterday in Amazon, and he closed it today. I'm like, that's actually a smart trade after earnings, because just pick like 100 points out of the money and sell them for 80 cents, and then wait 5 days. But that's it's such a hard stock for me to trade that way, because I don't see what holds it up, and it's just hard to kind of structure a position around it.
But they stream great free videos. I mean, what's wrong with that?
Everything they sell is they don't make money on, right? Their cloud service. Well, we don't really make money there. We don't make
pretty
money
much
selling stuff.
My favorite Amazon.
Yeah, but look at the potential, though.
I know, exactly. They don't make money selling their Kindles.
Someday, at some point, they will turn the button on, and all the money will come flowing in. I think my favorite Amazon story comes back probably like 5 or 6 years ago, when the Harry Potter books were still huge, and Amazon offered some around the time of the launch of one of the Harry Potter books, free overnight shipping on the book if you pre-ordered it with them. And some analyst pointed out to them, if you, with the cost of that overnight shipping, which was like $20, you're actually losing like $3, $5 a book. And Bezos is like, well, but we're adding customer value. That pretty much is the mantra of Amazon. They'll take a hit on some of these things in order to provide. I give it to them. I as a customer, I love them. As a diehard, perhaps less diehard fundamentalist than Andrew, not as big of a fan there. But as a customer, yeah, I'm a pleased customer. So if there was some metric of customer value and customer appreciation that could be somehow would be priced into fundamentals, and they would certainly be, I think, the highest on this chart. Much higher than even an Apple or anyone else.
At some point, they nick a couple bucks more per transaction, and then their margins will start to go up. But that's always been kind of the story since since the mid 90s,
exactly. So yeah, we're not breaking any new ground here on Amazon, but still an interesting one. For you diehard fundamentalists. All right, and with that, that's going to close out the Around the Block segment. That's also going to do it for this episode of the Option Block. We hope all of our listeners out there, particularly on the East Coast, there fared well through the storm, and you have power back so you can listen to us, and that everyone's safe and sound and not too much damage, and that you learned a little lesson from watching the markets. They can close on perhaps a moment's notice and perhaps without too much reason behind it. So keep that in mind when you're pricing in things like weekend risk, and access to capital is a risk. So if you think it from that perspective, definitely keep that in mind before you run out and start blasting every bid before the weekend like everyone loves to do these days. And before we go, I like to check in with all of my cohorts here on the old All-Star panel to see what they're up to. Starting off with the Lobster, Mr. Andrew Giovinazzi. What's coming up in the land of the pit?
Big event we have with the streets and with the CBOE, using volatility to improve your directional trading, much along the lines of some of Mr. Tosaw's discussion, how he likes to, sell the juice to get long, short, whatever, to do what he needs to do, but yet in a protected way. And this is an all-day seminar with Mark, Jim Bittman, and the street. And it basically tries to take those bizarre concepts of volatility and morph it into a usable and effective trading strategy. Basically, like anybody else's, you just want to end the year with more money than you started. And that is and that's sort of the basis of what we're doing here. But helping volatility when it makes sense to do certain types of trades and when it does not make sense to do certain types of trades. So,
unless you're Amazon, then you want to just give all your money to everyone at the end of the year, and everyone loves you.
Exactly.
You will buy their love very dearly.
It works.
All right, and Mr. Tosaw, what is coming up in the land of KYO? What's coming up on that old webinar train?
We got 2 stops this week on the webinar train. Wednesday night, we have George, our very own. He's going to discuss some post-election strategies on Wednesday night. You do not want to miss this. George has a lot of stocks that he's been watching, and he's been chomping at the bit to do this webinar for a while. And on Thursday night, we're going to go back into the futures land, because if you know, as everyone knows, if you're not trading futures, you're simply in the past. I'm sure that's never been done before, has it? But we're going to be bringing on Quant Trade. They're a CTA, and we'll be partnering up with them in several ways. And we're going to be doing a webinar with them, and it's going to be talking about day trading and how they do it, what they do, what they look for, how they're doing things on a computerized basis, and just how they do it, basically. So we're excited to welcome them back. We tried to do a couple things with them a couple years ago, but it couldn't work out for a variety of reasons. But we believe that all the bugs have been debugged, and we're ready to dive back into that. So tune in Wednesday night and Thursday night, folks.
Two webinars on the old webinar train. And that actually, what you just said is terrifying to me, but you're totally right. That is post-election next Thursday. How scary is that we're already at that point?
Yes.
I can't believe this. We're already at election day here. In fact, I've already voted, so I'm already counted. Of course, I'm in Illinois, so my vote is moot anyway. I was talking to
you're in Chicago, though, so you get to vote another 2 or 3 times,
that's true.
Right?
That's true. Oh, yes. I'll tell you a story about that off the show, Uncle Mike. It's kind of funny. But yes, and last but certainly not least, Mr. Dave, what's coming up in the land of the OX?
Yeah, well, we have 2 live events coming up. Next is in Houston, December 1st. So if you're in South Texas, please register and go online and go to events and the Options Express account. And let's see, we have Boca Raton on December 8th also. So locals and snowbirds are welcome. So feel free to go on the website and check those out if you're in the area. Absolutely free. And don't forget about futures, guys.
Gotta love those futures. They could have been a saving grace, perhaps, this week with everything that was going on in the cash equities and that side of the fence. All right, that's going to do it for this show. Before we go, if you'd like to catch up on any of the topics we talked about on the show, as well as some of the unusual activity and other elements we highlighted on the old program, then by all means surf on over to theoptionsinsider.com. You can find all of that stuff and much more, as well as all of the fun programs here on the old Options Insider Radio Network. And of course, on behalf of all of us here on the old Option Block All-Star Panel, we want to thank all of you in the listening audience for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.